a lot to look at and how this is playing out into the risk environment this morning. We know that euro trading at a 3-month low against the dollar. Of course, we had the European elections on the weekend. What are your thoughts on what that means for that euro going forward? Because it has retraced down. Nicolas Sarkozy was a key architect of those bailouts for indebted countries. He was a big supporter of austerity. So what does it mean now that Hollande has won the French election for that euro?
Hi Samantha. Well, as you know, we've been bearish on the euro for a while, but hadn't quite had anticipated that, in fact, had the elections gone as they've gone, this would be a worst case outcome for the markets, and so it's unsurprising really that the euro has slipped as far as it has. Mr. Hollande in his presidential campaign was quite outspoken against the austerity measures that had been implemented by Merkel and Sarkozy, and then really campaigned on that basis. And we're seeing this being a feature of quite a few of the election campaigns that are occurring across Europe at the moment, and I think that's really got the markets back up. And of course, this is the debt crisis coming back to the fore. So we remain bearish on the euro, and of course, the fact that we're bearish on the euro does have some implications for the rand. We see the rand continuing to track a largely weaker euro, and that implies some rand weakness further down the line as well.
You have been calling, of course, for a rand weakness for some time now. One of the bears in the market, Standard Bank, that is sitting at what, R7.84 this morning, R7.85. What are your views on where that rand might slip to today in light of the negative trading environment we're seeing playing out?
Well, I think as the reaction to the election continues to play out, certainly the rand is going to be on the back foot. So there's scope for much further weakness today and into the week as further European countries also head to the polls. We're also getting some indications that there might be wobbles in Germany's coalition as well. So I think for this week, really risk sentiment is going to be really under pressure, and that implies some rand weakness into the end of the week. But going forward, we see the rand slipping to about 8.20 by the third quarter. So we've got a fairly mild depreciation priced in from this point on.
We obviously had that jobs data coming through from the US on Friday. Has this changed your view at all on the recovery that we've been seeing in the US economy and how that dollar is going to perform overall?
It hasn't really changed our view, but it's just a continuation of the fact that US data continues to remain relatively mixed. A few months ago, we had some very clear indications. All the data seemed to be moving in the same direction, indicating that the economy was starting to pick up speed. Now we've had a few disappointments, and the non-farm payroll certainly missed estimates by quite a wide margin. So that does have, has put talk of QE3 back on the front burner. And so I think probably going forward, one will have to watch those FOMC statements and other talks by Bernanke and other members of the committee to get some understanding of where they might be headed for QE3, and I think that's going to be quite pivotal as well for where we see the dollar headed over the medium term.
Well, of course, we've got local data coming out this week. We don't really see much of a reaction often from a currency perspective to local data, but we do have employment data and, of course, the key sectors, manufacturing and mining, reporting output numbers. So what are your thoughts on those numbers? Any impact that they might have on the currency?
Well, it's unlikely unless we get quite a big surprise from either the unemployment or the manufacturing numbers. I think the rand movements this week are going to be largely dictated by what happens in Europe. And over and above that, we don't have some very high expectations for data surprises this week, particularly not on the unemployment side. We've seen that number inch down, and certainly when you look at the Q1 data that we have to date, it does suggest that there is some underlying momentum in the economy that should keep the labor market reasonably well supported. But certainly we don't see scope for a huge improvement in that unemployment rate, and that would be something that, if it did occur, might at the margin affect the currency. Similarly, we don't have great expectations for a huge upside surprise in the manufacturing number either. So I think for this week, I think one would really have to continue to look offshore as for where you see the rand headed.